Hey guys, what's up and welcome to a new Tesla update video. So today, as per usual, let's go over Tesla, let's go over the market, let's figure out what is happening and what we can expect moving forward. So with all that being said and done, if you enjoy, don't forget to hit that like button as it does help a lot. This is not financial advice. I am not a financial advisor. And of course, my membership section on YouTube is live. The link is down below where I update my thoughts, posts, updates, options flow, which is a paid service, etc. throughout the day as this stock is moving. So if you're interested, just $3 a month in the description below. But yeah, with all that being said and done, let's jump right into it. Tesla closing on the day up about 0.84%, up about 0.4% after hours along with the market. As you can see, Apple and Amazon, you can just barely see here. Reported earnings, phenomenal earnings. Meta's apparently paying dividends now, which is interesting. It's kind of a bittersweet thing. We're not going to talk about it too much, but essentially that just means the growth is probably done. Usually when stocks start paying dividends, it means the growth is pretty much done. It's pretty much just like, I don't know. It's like a mutual fund now, honestly. It's just going to go sideways. Anyway, the point I'm trying to make here is the fact that it's good. The earnings are hitting well. Apple's coming up in about 20 minutes or so. And that's good to see, right? Because Tesla, you can see, is obviously rising up with them. And a lot of uncertainty now is gone. I believe tomorrow we still have the jobs report data coming out. But after that, a lot of uncertainty is gone in the market, right? Like Tesla's earnings is done. Pretty much all the major big tech, like market mover companies, like, Amazon, Apple, Meta, we had Microsoft, we had Google the other day, et cetera, et cetera, et cetera, et cetera. They're all done, all good to go. Apple soon. So there's, FOMC is done. All that stuff is done. So there's a lot of like uncertainty that's kind of out of the picture for, a nice amount of time, which is good for the market. The market hates uncertainty, right? So hopefully that gives us, more room to climb. And so far that seems to be the case. And I think that could be what finally pushes Tesla. Let's talk about Tesla out of this downward channel essentially that we are in, which is essentially just this yellow line. That's the most important thing. So today, pretty much a nothing burger day, right? Very, actually quite a low volume, one of the lowest volumes we've had in quite some time here. As I'm sure the market and, pretty much traders in general and whales, et cetera, we're pretty much anticipating these earnings coming up because these are big ones, right? These are very, very large earnings. So the fact that they're going well so far, we still have Apple to see, is a good sign, right? Because again, if they went bad, Tesla would most likely fall with them. The market would probably fall alongside as well. And we probably might be stuck in this downtrend for a while still, right? So far, that seems to be not the case. Now, the thing I'll be looking for is this. Whether it happens tomorrow or whether it happens very early next week, Monday or Tuesday, I do believe that this downtrend will be broken. I strongly believe that, and I will pretty much buy as it breaks. And I will continue riding it up. It's pretty simple. So we obviously had a pretty nothing burger day today, right? Pretty much just an indecision candle. Really not really. Tesla doesn't know where it wants to go off of, the current candlestick price action. At least is, what it's telling me. Tomorrow, when we open up, keep in mind, because this downward channel is so steep, the level to break pretty much with each passing day decreases a pretty decent amount because it's such a steep downtrend, right? Clearly, we so far have not been downtrending, and I do believe truly that this could have been the end right here, but earnings, of course, is an anomaly, kind of be like that. But now that we have stopped downtrending, we are kind of going sideways here, right? You don't, again, like I said yesterday, you don't need to necessarily rocket up and out of a downtrend to stop a downtrend. Or you can also just stop downtrending. You know what I mean? That's kind of what we're doing right now. We stopped downtrending. We found a base around this 180s-ish level. And that's good, right? That's one way to stop a downtrend, right? And as long as we continue and we break out of this, which tomorrow will be somewhere around like 191, we'll say roughly 191-ish, right? If I go to the 4-hour chart, it's a little bit easier, right? About 191, we'll say, to be safe. That's a good start. And then after that, of course, we have the 195 level, which would be right above that, which is important to break as well. But in my opinion, as long as we break both of those levels, I feel fairly confident that Tesla will come up at the very least to gap fill the earnings gap, right? Keep in mind, there are quite a lot of gaps. I'm sure there's a way for me to show gap methods somewhere here. Does this maybe show it? I don't know if this will show. Let's see. Yeah, I don't know what the hell that's doing, so whatever. The point is the fact that when we did this downtrend, we left a lot of gaps. For instance, this earnings gap up here, we left the gap all the way up here at 227. We left the gap all the way here at 234. We left the gap all the way up here at 248. Now, I'm not saying they're all going to get filled because, technically we also have a bunch of gaps under us as well, right? We have a gap, for instance, all the way down here, about 143. We have a gap all the way down here at about 122. We have a gap all the way down here at about 113. So I'm not saying all these gaps will get filled, but I do think at least some of them, at the very least, the earnings gap will get filled. So, like I said, technically, as long as we're still in this downtrend, like I always said, and I will continue saying, technically, the play to the downside of about 177-ish is still in action, right? But in my opinion, once you break this downtrend of about at least above 190 to 191, I think this That doesn't fully eliminate the possibility because you never know what the market can or will do, but it substantially decreases the chances of us coming down to this 177-ish, give or take, level to test this downtrend red line, which of course is kind of the massive channel that we are so far, bouncing it. So take that into account. That's important to understand, right? But that's the main thing I'll be looking at right now. Now, of course, the main question lies, well, okay, cool. We broke the downtrend. Where to next, right? Well, the question is, the answer is pretty simple. All you do is take a nice, beautiful looking Fibonacci, go from the swing top to the swing low, pretty much like so. And this is just one way to look at it, right? This is just one way. The first level I'll be looking at is pretty much around the gap fill, which is around that 0.32 level, which is around about 210, 212-ish dollars per share. Above that, we have the 0.5 level at 222. Above that, we have the 0.618 level at about 232. The 0.5 level also lines up with the 200 moving average on the weekly. The 232 level, what lines up with the 200-day moving average on the daily. Now, speaking of moving averages, there's something important to discuss. Let me take a look at how aftermarket is going very, very quickly here. Still looking beautiful. Apple still waiting on that as well. One thing to note is this. So we have a death cross, right? It has occurred. This is a death cross, right? When the 50-day moving average crosses below the 200-day moving average, it is called the death cross. Let me go ahead and pull something up quickly. Now, as the name suggests, the death cross, it sounds bad, right? It sounds scary. It sounds like things are about to just plummet. In fact, ironically enough, quite the opposite, believe it or not. Death crosses apparently are completely over-exaggerated, as you can even see in here, right? Despite the dramatic name, the death cross has been followed by above average short-term returns in recent years. Not just Tesla, stocks in general, like QQQ, for instance, is an example they cite over here. If you click on this, right? It's just a scary name. And if you actually read this article, essentially pretty much what it says is the fact that this doesn't signal future bearish momentum. What it does is it signals that the momentum has been bearish. It just signals that the momentum is just slow. There is just very little momentum right now and has been little momentum, which obviously is true. I'm sure we're all quite aware. It doesn't signal the fact that we are supposed to, now that this happened, crash even further. So if we, let's say we happen to do crash, it's pretty much, it has nothing to do with this indicator. I know a lot of people look at it, but it's completely over exaggerated. In fact, like I said, quite the opposite. A lot of the times when a death cross does happen, you actually see potentially a short-term bottom and a short-term rally. For instance, let's take a look back at when this happened on Tesla, way back all the way over here. Death cross happened right over here. We're pretty much sitting on like this day right here, right? And then look at that. We had a nice little rally. Sure, we came back down not too long after. Nothing to do with the death cross. All we did was come back to the same level and we just went sideways. Nothing wrong with that. Pretty normal stuff after such a move to the downside, right? Pretty normal stuff. And what happened right after this little sideways action and we finally picked a direction? We rocketed up, right? We went up substantially higher. We went from about an average of $220 per share all the way up to about $310 per share after the death cross happened. And then of course you can argue, well, what about this situation here where we just completely crashed? Well, first and foremost, you have to understand, right? Earnings was a bit a part of it. But second of all, you have to also understand this was pretty much when Elon was selling for a long time. Like he was selling for months essentially here. A lot of selling for Twitter or X purchase, right? So keep that in mind as well, right? To understand. That's why I want to just kind of point that out. A lot of people are going to start talking about this death cross, if not already. I promise you that. But again, in my opinion, is not even just my opinion, just literally, it is just over exaggerated and it doesn't actually, it's not as scary as it sounds at all. If anything, it's quite the opposite. So just, we'll see if that plays out. But I do strongly believe that it's irrelevant. You don't want to, it doesn't mean anything. It's completely pointless. People to put too much emphasis on it. The main thing you want to look at is just simple technicals such as breaking downtrends and things like that and support resistances, right? Even looking at simple things like RSI, MACD, right? For instance, on the 4-hour chart, you can see RSI is starting to find some life, which is good to see. MACD is flipping bullish, which is great to see. We have, where is it over here? The stochastic over here showing some life over here as well, which is nice to see, right? So we're basing. It seems like we're basing now. What else did I want to take a quick look at? I think it was this one here. So if we go take this bad boy here and we go over to the daily chart, right, we can see we're now also once again closing at above the 5-day moving average, which is like a short-term momentum moving average. Yesterday we closed right at it. Today we closed right above it. So again, as long as we can break above this downtrend, I do believe the uptrend should slowly begin, and I do think it'll probably be sometime early next week as to when we can potentially start thinking about and potentially even seeing a move back up finally. Again, you never know. The market will always humble you if you're not if you're too greedy, I guess, so always take things with a grain of salt, but that's just the way I am personally seeing it right now. Now, like I said, if we do come up to those levels, like I talked about, the Fibonacci levels, right, or just a retest of these trend lines, right, first level will be the gap fill, earnings gap fill, about 210 per share. After that, it'll be pretty much around 220 almost per share, which is going to be roughly where that 200 moving averages, retest of these trend lines, all around that general 220-ish level per share. Again, give or take, of course. And above that, we can go as high as even potentially just barely in the 230s, which is where the 200 daily moving averages, and also a retest of the upper trend line as well. So those are the main things I'll be looking at, essentially as a potential dead cat bounce. But there is also potential that if this is just rather nothing more than, remember I talked about that what was it called? The three drive bullish pattern. I forgot what it was called, but essentially where, we have three drives like this, three sharp moves to the downside, essentially creating a massive channel, potentially still a massive bull flag. There's still an argument to be made. This is a bull flag. Again, take the Fibonacci from all the way over the lows over here to all the way over the highs over here. Again, not perfectly drawn, but you can see that 0.618 level is sitting at roughly where we have bounced so far, just about $180 per share. That technically to me still means that this could potentially still be a bull flag. Again, it doesn't mean it has to be, it doesn't mean it will, but as long as we maintain above the 0.618 level, to me, that's still good enough to consider this a bull flag. If we do drop below that, though, I do believe this bull flag pattern really starts to fall apart, and I don't think that this bull flag pattern has any merit whatsoever. But as long as we're still within and above the 0.618 level on this from swing low to swing high Fibonacci sequence, I still look at it as a potential bull flag. I really do. As crazy as some people might think that might be, I still personally see it as having that potential. So we'll see if it plays out like that. And the final thing to talk about, of course, as per usual, is going to be options flow using Cheddar Flow. Link is down below if you're interested. By the way, you get 25% off for like a 3-month package, which is pretty sweet. Very, very useful stuff. Again, I filter my Cheddar Flow, my options flow on Tesla by showing only premiums of above $100,000. Because I want to see what the big boys are doing. I don't care what a 20K or 50K premium is doing. I can go ahead and put up a 20K call on Tesla. Who cares? Doesn't mean I know shit, right? I want to see what the big boys are doing. People with the deep pockets. What are they doing, right? You can even increase this even further, but 100K is not bad. It's a good start. That's a pretty sizable amount of money. Overall, the flow's been bullish. The flow's absolutely been bullish. If you look at flow overview very quickly, you can see Tesla is the most bullish one by far all the way over here. So let's go back to Tesla here very quickly. Let's go ahead and increase this back up to 100. And you can see we'll start off with the one scary potential thing here first, which is going to be, we have an 8.7 million put order. It's a block, so it's probably an institution, but it is a 250 put, pretty short dated, February 16, 250 put, so it's very much in the money, but it is a pretty substantial, premium, 9 million. That is quite a lot, right? Never know the full picture. Could just be a hedge. You don't know. We don't know the full picture here, but something to note. However, other than that, there's been a lot of bullish flow. We have a 600K call flow over here for this Friday, 185 call above the ask, which is bullish. 200K almost over here, 187.5 call above the ask for next week, bullish. 156K right here, also for this Friday, bullish. Another one down here, 134, same thing for next week, 187 call, ask, bullish. So there's a lot of bullish flow coming in. The only one that's potentially like, oh, well, maybe it's not so bullish is really just this 8.7 million, which is a pretty sizable, of course. That is substantially larger than any of the bullish flow. But there is also a lot of smaller ones. Like for instance, even down here, we have a lot of bullish flow coming in. For instance, right here, we had almost 800K for the 1st of March, 205 call, right? We have 650Ks here, call at 230 calls for, what is that, January, February, March, April, I believe, 17th. So a lot of bullish flow coming in for Tesla. Again, the only party pooper, if you will, is this 8.7 million put. But again, we don't know the full picture, and that fact that it's a block tells me it's most likely an institution potentially hedging. That's just my guess. Again, who knows? But all in all, Tesla's looking pretty good. I think we're hopefully potentially ready to finally break above this downtrend, assuming things go well. But with all that being said and done, we have Apple earnings coming up. That should be the last major one. Tomorrow we have the jobs data, and as long as none of these completely destroy the market, I think we can finally start looking for a move to the upside, as a lot of uncertainty, fingers crossed, of course, is now gone. But with all that being said, thanks for watching, and I'll see you for the next one. Peace.